What's up, guys? Welcome back to DCA. So today what we're going to do is talk about a follow-up to the prior video we just did. So in that video, we demonstrated the price levels at which Bitcoin is held. So how many Bitcoin are held at each price level. And we segmented that by short-term holders and long-term holders. So we're going to take a look at the culmination of that in this video. We're going to show the average price which short-term holders own the asset and the average price which long-term holders own the asset. So if you weren't able to watch the prior video, in summary, what we demonstrated was here is the Bitcoin price. Okay, this is the price of Bitcoin. These are the short-term holders of Bitcoin, what price level they own the asset at, and how many Bitcoin are owned at each level. Okay, so if you're coming from below, so let's say you're coming from 30,000 up to 40,000, you're going to encounter resistance due to these short-term holders. Conversely, over here you have long-term holders. This shows the price at which the long-term holders own the asset, and essentially as you're coming down, these long-term holders are going to form support levels for the asset. Okay, so we're going to be looking at the culmination of that today. In other words, we're going to be looking at the realized price, which is what this metric is called, the realized price of long-term holders, meaning the average price of Bitcoin the last time that it moved on the network for long-term holders over time, and we're going to see how that relates to the market cycle. Now we're doing this because, as you can see here, long-term holders tend to own the asset at an average price right around near where the market cycle bottom occurs. Now, why does that happen? Well, it's simple economics. Long-term holders will generally not be willing to sell the asset over time. Okay? They're not willing to sell, and they're certainly not willing to sell as the price falls down to their cost basis. If the price is at their cost basis, they're not going to sell. In fact, typically we see them start to acquire more. All right. So they are acquiring more, and you run into a simple supply and demand issue. There's a high demand for Bitcoin as the price goes down. As price goes down, demand goes up. However, there's simply not the level of supply needed to fill the demand, so the price must go up. Now, conversely, when you're at these higher prices, you tend to see a high level of supply. And that's because long-term holders are willing to sell when you're at these very high prices, as are short-term sellers, because that's a characteristic of short-term sellers. They sell the asset in a reactionary manner, oftentimes chasing pumps, selling the second that there's signs of weakness in the market. So that's what we see. Statistically speaking, a short-term seller is obviously much more likely to sell the asset. Okay, so we're going to look at both the average price for the long-term holders, or the realized price, and that's in general going to be more important to our discussion today, but we're also going to look at the realized price for these short-term holders. Let's start with long-term holders. So in the prior video, we discussed the fact that long-term holders in general own the asset at much lower prices. And when we were looking at the distribution of prices where long-term holders own the asset, it's actually heavily split right now. So you have a large number of individuals owning the asset in this range. So you could generally think of it as 3K up to 12K. And then you have another large group of individuals owning anywhere from around $30,000 up to around $40,000. Then there's a next group, albeit a smaller group, of individuals owning the asset who became or are becoming new long-term holders that bought it up in the 50 to 60K range. Now the short-term holders, they are essentially all getting crushed right now. In fact, let's just start by looking at where their average price is. Right now, the average short-term holder is sitting at around 48K. Okay, so with our price all the way down today to 34K, at the time of recording, that was our lowest, somewhere in the 34K range. They are sitting at around 48K average price. Now for long-term holders, let's look at where they're at. They are actually at an average price right now of around 17.6K. Now let's take a look at this. So in our prior market cycles, so in 2014, in 2018 into 2019, we saw the market cycle bottom occur right at around these levels. So back then, our average realized price for long-term holders was at around $300. In 2019, our average realized price for long-term holders was at around $4,400. And now notice where our market cycle bottoms occurred, right at 3,200. And we had an extreme, like 1 or 2 days down to 175. But in general, you could say that it was at around 220 to 230. Okay, so not very far off where the average price for long-term holders was. So when we're in times of uncertainty in the market, we tend to see the price of Bitcoin plummet down to these levels. If you look at the macroeconomic level situation, if you look at interest rates, if you look at global events, if you look at the economy, if you consider COVID, if you consider the Fed money printing, Bitcoin is a risk-on asset, and we are heading into, at least at the moment, it's not certain that these events will unfold, but we are heading into what could potentially be a very severe market correction, both in the general market and furthermore into crypto. Now, oftentimes markets in the short term overreact. I'll give you that. And we could simply recover from here. These could be very short-term events that occur. But to not be cognizant of where this price is at 17.6K, I think would be quite foolish, especially when we have evidence that we go down to these levels when the market is undergoing severe levels of correction. So it happened back in 2014 into 2015, and it happened in 2018 into 2019. Now, I will give you additionally that, in my opinion, it would be very difficult to get down to this level, because I do think even in the face of market uncertainty, you have more high net worth, and we're talking ultra high net worth, as in some of the richest people in the world, who believe in Bitcoin now and believe what it stands for in the long term. So I think you would see accumulation of the asset perhaps before we got down to this very severe level. And, going beneath it may be more difficult in this climate than it has been in the past. But that doesn't guarantee that. Just because that is my belief, I'm not making decisions for Michael Saylor. Only he is. Only his, team of financial advisors, only his team of economic forecasters will be able to decide whether they're going to do that. I'm just merely speculating that, given how many back when we were in 2019 and the market was crashing, this massive capitulation we saw, there wasn't the same level of conviction with the same amount of money behind it. So it's true that potentially we may not get down to this level, but I think to ignore the level, you're setting yourself up to be unpleasantly surprised in case it did get down to those levels. So if you notice this line here in teal, this is the 20-week moving average. In red, we have the 200-week moving average. Notice how in the setting of a bull market, we bounce off of the 20-week moving average and use it as support until we fall through, and that is typically when we head into more bearish times. And where do we go? Down to the 200-week moving average. We did it back in the 2013 double peak cycle. We did it in 2017 going into 2018. When we fall below, we have trouble getting back above, and even if we do get back above for a short amount of time, we're typically not able to hold it, and then we go down to the 200. So then in this cycle, we held it until September and then used it as support, bounced into the bull run, hit 64K. We came down in May when the market crashed. We got above for a very short amount of time, but we're not able to hold it consistently as support, fell through, and now we're sitting in a spot of high levels of market uncertainty, both for the general market and for crypto market. So if this plays out like it has in the past, it would not be surprising to see the market head down to the 200-week moving average. Now, just note, this line is very similar, this bottom level is very similar to the average price of long-term holders. In fact, it is sitting at 17.6K, whereas our 200-week moving average is at 20K. Our 20-week moving average, which we say is sort of the support level for the bull market, is at 49.5K right now. And if we look at the short-term average holder price, that is currently at 48K. And you'll note it shows the identical pattern. We use it as support in the bull market, bounce off of it multiple times, fall below at nearly the identical point where we fall below the 20-week moving average, get back above at nearly the identical point, fall below at the same points in the COVID capitulation event of late 2019, early 2020, get back above at the identical point in April, and then we do it all over again as we go on this mini run that we had from the end of July into November, falling back through late November, early December. As you would see with the 20-week moving average, it nearly exactly relates to the short-term holder average price, as does the long-term holder average price to the 200-week moving average. We've been making videos on the channel ever since late November. When we fell below on this day, I made 2 videos talking about we fell below this 20-week. It doesn't mean the market cycle's over, but you need to be on red alert, because every time that we've seen this in the past, it typically leads to trouble. And then when we fell below the 50-week moving average, I made more videos talking about how this is a very bad sign and we could see the market head down from here. I just want to show you the facts. I want to show you the information, and that way, if you don't act on it, if you can take the information and you can use it however you'd like. If you don't want to act on it, that's fine. But if you are someone that just simply doesn't have the information, well, now you can arm yourself with it. It doesn't mean you need to be wildly reactionary. It doesn't mean you need to go panic sell your entire holding. All it means is now you know what the situation is. You know what your downside risk is potentially. It could be better or worse than I've described here, but at least you have a framework with which to judge what the market is doing right now based on historical events which have played out the same way over and over and over and over again in crypto. And in my opinion, will continue to play out this way into this market cycle, with perhaps slight variations. Every market cycle is different, but at least now you have a framework with which to work. You have information with which to make a plan. We're purely looking at the data here. And the data at the end of the day is all that matters. Not my opinion. The data is all that matters. That's it for this one, guys. Until next time, as usual, see you.